where you have good liquidity but maybe not good margins or capital flows outside of the US, then yeah, that can give you totally different looking cycles. Most of this kind of Bitcoin 16-year history happened within one particular kind of regime. And if we enter a pretty different regime, you can get pretty different dynamics, as well as just Bitcoin hitting a new scale and therefore having totally different types of marginal buyers and sellers.
Hey guys, welcome to Everyday Finance. Renowned macro strategist Lyn Alden is raising the alarm about the structural weaknesses in the global financial system, which are mostly caused by the dollar's excessive influence and the ongoing US trade deficit. She explains that by exporting dollars through trade imbalances, basically sending more dollars overseas than it receives in goods, the United States keeps its economic clout in the world. Although this system helps the United States borrow and spend, it puts more strain on other countries that depend on the dollar for reserves and international trade. Over-reliance on the dollar exposes the world to systemic risks as global economies grow more susceptible to changes in US interest rates and inflationary pressures. Alden contends that as countries start looking to distance themselves from US monetary policy decisions, this fragility may hasten the world's transition to alternative financial systems and stores of value. Her analysis highlights how the global distribution of financial power is changing and how assets like Bitcoin may become more important in the financial architecture of the future.
So I think it's one of the core issues. I think it's certainly in the top few. And so it's not surprising that it got elevated to become such a mainstream political issue from relative obscurity 10 years ago. I think my first article on it was back in 2019, with some references to it before then, but that was kind of the first dedicated article, and then highlighted it in a 2020 article on the structure of the global reserve system. Like you mentioned, I kind of repurposed that for Broken Money. And so it has been this kind of a substantial background thing worth covering. And so it's interesting that that is finally getting a lot of emphasis just because of the politics around it. And one of the arguments that I've made is that a lot of times when you see academics analyzing the trade deficit, they'll look at kind of numbers in an ivory tower sense and say, oh, there's still room to go here. The numbers are still workable. But then there's this kind of there's this real politic or this populist overlay on top of it where it doesn't have to hit the absolute breaking point to get elevated to become a pretty serious political issue. And instead, it just has to accumulate enough that there's enough voters and enough politicians willing to elevate it. And so you generally, whenever you have a major imbalance, usually you get a rising populist tension against that imbalance. And I think that's what we've seen with the trade deficit.
Yeah, and is part of that like the populism element of that down to how complicated it is to actually explain the issue that we're facing here?
I do think it's that's one of the downsides is it's very complex. And then so usually the ways that it's then explained are incorrect at worst or very incomplete at best. There are certain topics that are just inherently easier to cover. And there's always that saying that, if you know something well, you can simplify it. But that's true to a degree, which is that some topics are more complex than others. And in political speeches in particular, you generally want to have a clear, like, enemy kind of like it's their fault, therefore we're going to fix it. Whereas if you have this kind of tangled mess, it's easy to say it's their fault. It's kind of like saying it's our fault, it's our predecessor's fault, it's a part of the system, it's kind of nobody's fault. It's kind of all those answers are partially true. And so it's this big Gordian knot that's been tied over the course of arguably 50 years, if not longer. And so but it's a cumulative thing. So for example, a handful of years of a trade deficit are not a giant deal, but when you have 50 years in a row of them, that's a massive trend, and it's accumulated on one side. Just like you keep taking kind of pieces off one side of the table, put them on the other side of the table, and when you do that for 50 years, that one side of the table has almost no pieces left, and the other side is just overflowing, and that's when you get pretty big pushback. So I think that the cycle's had some periods where it only looked like 3 years. Like
Uh-huh.
the halving point to the peak of the bull market does vary. I do think we're going to get more complicated cycles going forward. It's not going to be as simple as just 4 years. Um, mining is like a smaller ratio of new coins, like a smaller share of like coins hitting the market. Obviously, the increasing the biggest pool of coins available are resold older coins, existing coins.
Yeah.
So mining cycles should increasingly diminish, and then on top of that, the more it gets institutionalized, or the more that you encounter those scenarios, like I mentioned, where you have good liquidity but maybe not good margins, or capital flows outside of the U.S., then yeah, that can give you totally different looking cycles. Most of this kind of Bitcoin 16-year history happened within one particular kind of regime. And if we enter a pretty different regime, you get pretty different dynamics, as well as just Bitcoin hitting a new scale and therefore having totally different types of marginal buyers and sellers.
By predicting that Bitcoin may reach approximately $1 million between 2027 and 2029, cryptocurrency analyst Ash Crypto has rekindled optimism in digital markets. Long-term historical price cycles, which consistently exhibit parabolic growth following periods of consolidation, serve as the foundation for his assertion. Despite its ambitious nature, this prediction is attracting interest due to its potential benefits for both Bitcoin holders and altcoins such as XRP. XRP has already experienced notable gains, rising from 55 cents in November 2024 to $3.39 by January 2025, mirroring Bitcoin's breakthrough past $100,000 and eventual new high of $119,114. The altcoin market frequently follows the momentum of Bitcoin. Both assets have started to rise again after a brief decline, helped by favorable geopolitical sentiment, especially a trade deal Donald Trump signed with the UK after Brexit. By mid-2025, analysts now predict that XRP will be between $4 and $6, with a possible increase to $30 if Bitcoin reaches the $250,000 mark. The implication is obvious. We might be entering a new era where the success of Bitcoin serves as a rising tide for the entire cryptocurrency market, as institutional adoption increases and macro trends encourage the growth of digital assets.
Yeah, I mean, not like conviction wise, I'm not really sure what gold is going to do, but I do think there are increased risks that it maybe pauses here for a period of time. The last time I felt like this was after its really big run in 2020. Um, and then, that point, it actually lasted, the consolidation lasted longer than I would have expected for gold. I thought maybe we'd pause for a year I think it paused for like 2.5 or 3 years. Um, and I do think gold's probably due for a pause here. Doesn't mean it has to happen, but the probability has just gone up so much. Where like I wouldn't be shocked to see 6 months of just chopping around or maybe longer. Whereas Bitcoin's interesting because it worked off a lot of the valuation pressure. So in March 2024, Bitcoin had the ETF euphoria pump. There are various metrics you can look at. Like I like market cap to on-chain cost basis ratio. One of my go-to, but there's other metrics you can look at. It's kind of just a sanity check for how euphoric the Bitcoin ecosystem is. It got somewhat elevated in March 2024. It spent like 7 months kind of working that off and going back down at pretty low levels, and then we got the election pump. Um, and that brought it up to similar levels again, where it's not like euphoric like one of those multi-year tops, but it's a little rich. So we're at like 108K, and we consolidated from November to the present. So 6 months or so of consolidation off the top of my head. Um, and we've kind of again worked off a lot of that excessive valuation. So I think we're kind of geared, unless some sort of liquidity shock happens, to probably grind up to new highs in the next 12 to 18 months. I would think so. Um, some of the technical signals look pretty good. Whereas gold is kind of on the other side, where it's sort of overbought and already had a really strong run. So I think we're kind of due for a little bit of a rotation. Um, but rather than try to be like too kind of choosy, I just hold both. Um, and kind of let them run. And it's for me, it's more about setting expectations and probabilities. The short answer is I'm not sure. I mean, I'd be surprised if we don't see a 150 by the end of this cycle, whatever you want to call this cycle, whether it's 18 months or whatever the case may be. Ideally, I'd like to see higher than that. Um,
hmm
but I always try to be conservative with my estimates. Um, I would consider it kind of a dud of a cycle if we don't see 150K. I don't think it would take much to see 150K or higher. So that, I think first step, let's see new all-time highs. Let's go over 110. Um, and then we'll see what the market looks like then. So I kind of try to break it into smaller pieces rather than look out, but broad strokes, I'm bullish with an 18-month view, unless I see something that makes me update that view. So at least where I sit now. And I'd be kind of surprised not to see 150 or more. Yeah, I mean, I think it's one of those things like if we want to see Bitcoin become a reasonable share of global assets, it does have to have another, handful of pretty good bull runs. Um, if it starts to become like a 20-30% year asset, that's obviously still great. I mean, it's nice to have that. But we want to see Bitcoin go from 0.2% to like 1% of global assets, and then maybe work its way up toward 2, and that requires some growth. So I try to be conservative, but too conservative is kind of disappointing. Well, I mean, the history of those have changed over time. It used to be a primary income source. Now it's a much smaller income source. Um, and this is where there's always kind of partial truth to things. So it is true that there are some countries that have done very protectionist, mercantilist policies where they try to tariff things that come into them while trying to exploit others. But that's kind of an overlay on top of these deeper structural issues that I covered. Um, like it's not like China is more competitive in manufacturing, not just because of tariff differentials, it's because of all sorts of reasons, including global reserve currency, as the cost of manufacturing there, the build-up network effects of being a manufacturing hub, and all those types of things. Healthcare costs, all sorts of stuff. Um, and so tariffs are certainly a tool. And for example, in that Stephen Meyer paper I referenced, he references them as a tool. Um, but tariffs alone, I mean, one, they start to make a more kind of fractured world in general.
Hmm.
And then they increase uncertainty. So I would describe that when you have an extreme imbalance like this, there's certainly a tool that's on the table. And then the question is, how well is that tool used? Some of the proposals in that paper were to like say gradually and transparently start ratcheting up some of those tariffs to gradually increase U.S. negotiating position to then get a currency accord, as well as a thing to say, look, if you're our ally, this is your low tariff rate. If you're not our ally, this is our like higher tariff rate because we want our economy to less intertwined than yours. Even just military and geopolitically, like there's just more risk there. We want to have more of a buffer. So there's reasonable ways that those could be implemented. And I think the issue now, of course, is that we kind of rushed it. We front ran it. We got triple digit tariffs in a matter of months, and then businesses kind of froze because they say that we literally can't do anything right now. We can't even. It takes years to relocate. So what do you want us to do? Um, so yeah, it's a tool in the toolbox when you have really big imbalances.
The Saudi central bank made its first significant foray into Bitcoin by strategically investing in MicroStrategy, which was recently rebranded as Strategy, by acquiring more than 25,000 shares, marking a significant step for both cryptocurrency adoption and sovereign wealth strategy. With an allocation of about $84 billion, Strategy currently has the largest institutional Bitcoin reserve in the world, with over 568,000 BTC. This investment indicates a significant change in how traditional oil economies are preparing for a digital future by directly connecting a portion of Saudi Arabia's sovereign wealth to the destiny of Bitcoin. The Mubadala Fund in Abu Dhabi revealed the approximately $48.5 million investment in BlackRock's Spot Bitcoin ETF, indicating a wider trend among Gulf countries to diversify away from reliance on oil and the dominance of the US dollar. As these nations look to modernize their economies and protect themselves from potential disruptions in traditional markets, their shift toward digital assets demonstrates strategic foresight. Additionally, it's an endorsement of Bitcoin as a respectable, institutional-level store of value. Bitcoin may move from being a speculative asset to a mainstay of sovereign wealth portfolios as more countries adopt similar policies, hastening its assimilation into the core of international finance.